For more on the, I suppose, a close look, if you like, at the fixed income space, we're joined by Dr. Stephen Nash from FIIG Securities. Stephen, great to see you. Let's just firstly look at Rick Battolino's speech in New York. Look, what did you make of it? Was it a bearish? Was it a hawkish? He seemed to have, I suppose, a foot in both camps.
Look, I think the Reserve Bank has been trying to paint the picture that Australia has moved away from the developed world to some extent, particularly with regard to trade flows, and that given that move, we're less linked to what's going on in the developed world. So that would mean, I suppose, that the idea of a rate cut or an immediate rate cut is probably off the agenda right now. There's got to be more assessment of what's going on in the Australian economy first. We've seen some uptick in the unemployment rate, but I think broadly the RBA is trying to distance the Australian situation from what's happening in the developed world right now.
It was interesting. Obviously, he made these comments as the Fed Reserve was having the FOMC meeting, suggesting there were some serious risks, if you like, to the outlook, negative risks to the outlook of the economy. Look, what did you make of the statement by the FOMC, the announcement? Obviously, Operation Twist as expected, but it was really the rhetoric around the US economy that caused a bit of fear.
Look, I think the commentary indicates that the FOMC will continue to do what it needs to do in order to support growth. The inclusion of the 30-year purchase, I think, was quite significant. I think the market had anticipated to some extent the purchase of 30-year securities. Now, the 30-10 spread, or the spread of the 30-year bond relative to the 10-year, had blown out of late to about 150 basis points, but it had come in significantly over the last few weeks. And last night's announcement saw that contraction around 10 basis points, and I imagine there'll be more of that to come. So that means that the 30-year mortgage rate in the US should...
Stephen, we're going to have to leave it there. We're actually going to break to normal program. I'm going to take you live now to Sydney, where Assistant RBA Governor of Economics, Philip Lowe, is addressing the Australian Economic